Everybody. So let's see how the volume sounds today. I have a bass, I have a baritone voice, so I don't really speak. I don't shout. I'm not a shouter. So, I'm a Darth Vader type. You hear what I say, and it resonates. So, shout out to all the Star Wars fans out there. Hope you're watching Bad Batch. It's not a Disney plug, by the way. Definitely not a Disney plug. Not what they've been doing lately with Star Wars and Marvel. But anyway, let's get focused here. It is TGIF Friday. Wanted to quickly, before we get into our macro data, before we get into Bitcoin hitting a new all-time high, cracking it and then pulling right back. I want to talk about the value of My Tech Academy and what we are bringing to you out there who watch this YouTube channel. And it is a new course that's launching, taught by Eli, this gentleman right here. This intelligent investor, part of the trio, as I like to say, the three handsome amigos. We have a business credit course that is going on pre-sale. Again, mytechacademy.io, mytechacademy.io. And we also are doing a lot of other sales for other products. So that'll get you access to the crypto fundamental analysis course, which is taught by me. And then you have the IT portions of the community course material by Chuck. And then all the other plethora of course knowledge that is available in our community, not to mention having access to the Slack group, etc. So this is the business credit course. When you go to mytechacademy.io, you see Eli here. I've been working on new products and services inside of My Tech Academy. So today we are going to launch one of the many new products that I will be featuring inside of My Tech Academy. So there you go. We got a lot going on here. This business credit, for those of you who are business minded, entrepreneurial minded, and want to get funding and not sure where to start. You're really unsure. You see people out here getting funding for capital, especially if you're a small business owner, but you don't know how to structure things properly. And that's what this business credit course is designed to do. It's to help you get started on the right foot, bring your knowledge game up so you know how to check your credit and get the funding that you need over time. This is not a instant gratification course because something like credit, something like building a business takes time. But what you learn in this course is extremely beneficial, very knowledgeable. Eli is very knowledgeable at this, and he does this consistently, daily. So you are learning from the man himself, and he's accessible. So it's not like he's giving you a course and then you can't reach out to him. You get right in the Slack group and he's right there. We'll talk, we'll converse, we'll go live, you name it. So this is really valuable to those out here who are watching that are business minded, that are looking for funding for their small business, for a project, and maybe not have a pitch deck ready. But can do some funding, can get their credit right to get their funding to kind of accelerate, So that's what's happening here in My Tech Academy. A lot to come down the pipeline in 2024 and 2025. So, we are more a quality over quantity type of community. We're not going to bombard you with tons of courses and courses here that don't bring value. When we do put out something, it's everlasting. It's an evergreen type of course. So that is what we're talking about here this morning. All right. The U.S. non-farm payroll data came out. There was a forecast of 200K. Actual was 275K. Revised from 229K. And, the previous was 353,000. So you can see all this right here, right there on the U.S. Bureau of Labor and Statistics. And it essentially, this
signals to the Fed that their monetary policies are working. Still seeing, if you will, healthy job growth, although this is a decrease from 353. It's important to note that like fluctuations like this are normal, and the figure still represents a substantial job creation. In terms of this affecting Fed policy and whatnot, the positive side of this is that we still see a strong economy. I mean, that's still there. But on the downside, if we get continual uptick, because this is higher than the revised number. So the revised number was 229, which was pretty alarming. I'll actually just get into that right now. So when you have such a revised number, a downward, from 353 to 229, it shows that there is weakness happening in the economy. There is weakness happening in the economy, but we still have strength in job numbers. And this impact on the Federal Reserve, they incorporate this into their entire outlook for economic conditions to weigh their Fed policy. And these types of changes will allow them to say, hey, policy is working, or hey, policy is not working. We need to tighten up. So what I'm basically getting into is this data right here for the U.S. Payroll coincides with why Powell was saying this week the Fed is not far from the point of cutting interest rates. So in this speech, he remained neutral to dovish. He actually sounded slightly dovish, but he still remained neutral, which is part of the reason why the market's uptick. Because again, they saw this data already. Later today, so Powell spoke yesterday and the day before, but later today, or I should say earlier today, Fed Williams, earlier this morning, kind of walked back Powell's talk and his words way, because he is the New York Fed. And if you're not familiar, you can see exactly what is being pulled in terms of QT, quantitative tightening, from the New York Fed's website. So when you see and you hear about quantitative easing, quantitative tightening, the New York Fed posts that data. So he kind of pulled everything back to normal. The neutral rate is still likely low. And everything just kind of like evened out. I will say what I did notice earlier was the ECB, the European Central Bank, got along, but went along with what the Fed was saying in terms of a June or a third quarter rate cut, because now that is what the ECB is saying. They are saying a June rate cut, maybe a quarter of a percentage point. And like I told you earlier this week, Fed Bostic said the same thing. So all the central banks are in unison on their rate cut talks. And that's kind of where we're at. It is definitely reflective in the market. Let's just jump right here. We see Bitcoin. We see Ethereum. NVDA. I just want to quickly talk about NVDA. NVIDIA went parabolic. Did just kind of drop here, which was pretty substantial. Holy crap. This is live, by the way. So we went up to 977. I don't know. This is a pretty substantial drop here. We'll see if they can recover. We'll see if NVIDIA recovers, but NVIDIA did have an all-time high of 974, which was insane. They are the driver for the market. Now, when I say market, I mean crypto and the S&P 500. So let's just jump to the total. The total crypto market here, we pierced 2.5 trillion. Like I said, I could see us hitting to 2.5 trillion. We did that. We're now pulling back. Let's take a look at the altcoin market. The altcoin market is still pumping. We're at 686 billion. We did meet resistance at 710. So these Fibonacci retracement levels, math always wins. And that is a major resistance level for the overall altcoin market. So we'll see what type of pullback here. I am still seeing a double bottom pattern. So if you're not familiar, Google it. Double bottom is a bullish pattern. It's a reversal, but you go down, you come up, you extend up, you create like a neckline, and then you come back down, and then you run up again. And if you run up high enough, this previous high will become the new support, and then the new pattern starts all over again. So still seeing that. Bitcoin is pulling back here from its previous all-time high of 70,199 that you see here. This is on a monthly chart. 1, 2, 3, 4, 5, 6. So far, Bitcoin has had 6 straight months of just growth, of just running up. Usually there's a pullback in there. If you look back here at 2020, 1, 2, 3, 4, 5, 6. 6 straight months up, and then we had a pullback, and then we went up again, which 69K was that high. But it also formed a double top. So we came back down. So right here, we'll see if we can have another straight month up. Historically, Bitcoin hasn't done that, just based off what I just showed you here from a technical perspective. But we'll see. My RSI, so the RSI on Bitcoin is still showing room to run potentially. But the RSI is still making a lower high. So we're getting lower highs and lower lows from a relative strength perspective. You know, this first relative strength run up was Bitcoin is here now, retail, a lot of retail. This second run up was the inflation rate error. Low rates. Actually, you could say both were low rate errors. But then when rates started to kick in, when the Fed started their tightening of monetary policy, then we saw this pullback. This run up here, this error, if you will, is the ETF, you could say, run up. So Bitcoin is going up. We'll see how high it goes. Like I said, I see this trend line being a pivotal point here, but things can always change. So that's Bitcoin. Ethereum did hit Ethereum did hit 4,000. So like I've been telling you, I see Ethereum going up to 4,000. I still see 4,200 being a possibility, but that 4K to 4,200 makes perfect sense because, again, we are at a major resistant level. And same thing with Ethereum. Lower highs on the relative strength index, and I'm referring to a monthly. This is a monthly chart here, and lower lows. So we'll see. I still see a double bottom pattern here on ETH, which will subsequently be the entire altcoin market because, ETH is pulling back. All of your altcoins are running backwards as well, or eventually will be. Let's take a quick look at the S&P 500. The S&P is, it's being what the S&P is. So nothing really to report. Is not as volatile. We still have room to run on the relative strength here for the S&P. We haven't yet touched it, but we're getting very close. So we could get a nice little pump up, and then we'll wait and see if it breaks and we start to turn over. And then once we turn over, you're looking at close to half of what this current high is. So 4,400. We will hit levels on the way down. I'm expecting 4,700, 4,500, and then we wait around the 4,500 mark. If 4,500 doesn't hold, then we will have to take a look at the overall economy because then we're starting to get into an unknown, I would say a very hairy area of pullback, especially being on the monthly, the 200-day moving average being so low, close to 2,700 on the S&P 500. So yeah, Nasdaq, same scenario. If this candle here, we end the month and this is a reversal candle, a bearish reversal candle, then I expect us to shave at least 3,000 off the Nasdaq, and then it's going to be wait and see from there. Let's take a look. Japan, the Nikkei, the double top is forming here. They pulled back slightly, but man, you know, they took them 24 years to get there, to see new all-time high from 89. Look at this double top. This is insane. If this is really going to play out, they could have another 24 years of see ya in the Great Reset. That's ridiculous. Take a quick look at the VIX. The VIX is elevated, which explains the pullback. Like I said, I've been looking at that correlation between the VIX and volatile assets. So when the VIX is high, or it's not high here, but it is elevated, risk assets are pulling back. When the VIX is in that 13 range or lower, risk assets are accelerating. So just something to keep watch. If anyone here watching this has a similar correlation, let me know. But remember, when the VIX is low, it's time to go. This is still low. Above 22 indicates that there is little to no opportunities in the market because everything is overvalued. When the VIX starts to climb, that's when you start to buy. Like I said, when the VIX is high, it's time to buy. That's when you run into the fire, when it's in these elevated levels. And you think back, you look at September 2022, you look at, you know, February 2022, you look here, this was the March, this was the COVID era of the VIX. The VIX got as high as 85. Everyone was worried. The stock market was so low, but that's where all the opportunities were. Very little opportunities when the VIX is trading this low. You look back at the 2018, going as far back even to 2014, these little micro recessions that we had, and then obviously the Great Recession, the 2008 Great Recession. Look how elevated the VIX was. The VIX was high. It was so high. That's when you wanted to buy. That's when you made your money. So again, keep that in mind for opportunities out there. The VIX, when the VIX is low, it's time to go. When the VIX is high, it's time to buy. I would say anything at 22 and above, you can really start to look for opportunities to buy. Obviously, with the Bitcoin ETFs, with Bitcoin pulling back, the ETFs will. There's a lot of gap to fills here. So when this really starts to roll over, it's going to roll over. Inflection is 24. So if these ETFs, or at least the BlackRock ETF breaks 24, you can say we're going to be in a downtrend. And for the Fidelity one, breaking $37 is going to be deemed a downtrend. Yeah, let's take a quick look at gold since we're here. Gold's making a pump up because, again, the dollar is pulling back. There's weakness on the dollar. So gold is probably going to retest this channel up here at 2,300. It's making a solid move. Gold is still a safe haven asset for a lot there. And let's see. I do have this, the NYCB. So let's go back over to Fed Chair Powell. There we go. So during his 2-day speech, you know, real estate in the U.S. was brought up. Commercial real estate's pretty is on the precipice of rolling over. You have a lot of regional banks, which is why I brought up NYCB, with a lot of underperforming loans. And this is a well-known problem. You have a lot going on in the real estate market in the U.S. in terms of foreclosures, pre-foreclosures, and Same being, I'm talking about for residential, same being for commercial. So there's going to be some buying opportunities coming up for the commercial real estate market here in the US. And I would advise everyone to just keep watch. It's going to be ugly, but again, that's where the opportunities are. You know, you think about all these recessions, you think about all these crashes, that's when you want to buy. So sorry for this being a longer video than normal. There was a lot to cover. I did want to talk about a few talking points here, explain some things where I see things headed. Just overall, I think we traded within this range until the Fed announces their decisions for a rate cut or a pause or no rate hike or cut on the 18th of this month. I believe the 18th and the 19th is when the Federal Reserve is going to give their decision on what they're doing with rates. And then we'll just have to wait again. Going back to NVIDIA here, I will also say, you know, keep an eye out for NVIDIA's earnings come May and June. So you could have a perfect storm brewing where, say, NVIDIA posts a decline. You know, they're like, all right, the growth is kind of slowing. And this thing starts to roll over. And then you have the first rate cut. And usually around rate cuts is when the economy starts to fall into a recession. And the reason being is the Fed is always viewed as late to the party. They were late when it came to inflation. Remember, he said inflation is transitory, and it was not. Eli actually had a great video here. This video here by Eli, inflation isn't transitory, you know, discusses why the Fed is always behind the 8 ball. They're always behind the curve. So if the Fed starts cutting rates, then they should have been cutting rates 2-3 quarters ago. And so now it's kind of getting into the late zone, just like with raising rates. They were late to the party in raising rates. So the Fed is never forward thinking. The Fed is a lagging indicator on the economy. But just keep that in mind. I'm definitely going to keep watching. This is a huge pullback on NVIDIA. We're going to see how it ends, though, today, how this ends. If this really ends down, if this ends around 896, that'll be pretty telling, the body of the candle. And that would be a bearish engulfing candle here on a daily chart. So that won't be good. I mean, it would be good because that means there's opportunity that is about to present itself, but that means the economy is now starting to lose its luster. And the musical chairs are about to stop, and people are going to look for somewhere to sit down, and they won't have their seat per se. So just keep watch, be ready. Again, opportunities are going to present themselves. Do not FOMO into anything. Please do not FOMO into anything. And I'll see you guys next week. Enjoy the weekend. You've been listening to this one right here, Bruce. Again, 3 intelligent, nerdy, handsome amigos here. And check us out. We got a business credit course right now happening, which is lasting for 7 days. So,
Today,
yeah.
We will be launching the business credit course. Well, I will be teaching you how to properly build out your personal credit profile and then structure your business entity so that you can possibly obtain anywhere from $100,000 to $250,000 in business funding. Now, I know you're probably saying to yourself, Eli, that sounds too good to be true. How do we know what you're saying is actually possible? Well, the only way I can prove it to you is to show you that I myself have well over $250,000 in business funding. So if I can do this, I'm pretty sure I can teach you how to do the same.